Welcome back, everybody. We start now with our panel discussions. Three important themes that have been touched on already this morning that will address some of the most widely debated subjects in this space. You'll also notice a structure to the order of these sessions, a top-down approach to the subject, if you like, beginning with a session on financial inclusion. This will focus on the large, untapped potential for Islamic finance in the SME and the deposit space. Now, we've talked about realizing potential, about translating the impressive top-line numbers into actual business opportunity, but how to make this happen? How ready, how willing, and how able are Islamic banks to engage? There is much talk about an Islamic ecosystem, which I'm sure is well understood by everyone in this audience today. But at the end of the day, the question has to be whether the man on the street understands it. Surely this is one of the biggest challenges for Islamic finance to grow beyond its core constituency. Without further ado, let me introduce the panel's moderator, who will then introduce his speakers. Mr. Masood Ahmed is Director, Middle East and Central Asia Department at the IMF, who recently, I read in a paper, said there is much interest in no interest, and I think that line will stick with you, Masood. Masood Ahmed.
Thank you very much. Good morning to all of you, and welcome to this next session, which is a panel discussion. And here we're going to drill down a little bit into the financial inclusion potential of Islamic finance. So this morning you had two very comprehensive, broad speeches looking at the different dimensions of developing this industry, looking at its potential, but also looking at some of the obstacles and challenges that we face. And so now in the first of these three sessions, we've got a great panel that is going to help us try to understand a bit better how far have we come in terms of realizing this potential for inclusion, and what is it that is holding us back? What are some of the country experiences that we can learn from and draw from? And my role in this is really to try and get the best out of the panelists. So I want to just now introduce and ask them to come and join us up here so that we can carry on our conversation. And I want to start by inviting Dr. Ahmed Mohammed Ali Al-Madani, the President of the Islamic Development Bank and a leader in this field for many decades, and I hope he'll be able to start us off. Then I'd like to invite His Excellency Dr. Fahad Al-Mubarak, the Governor of Sama. And I'd like to invite also our host country, Dr. Anas Al-Saleh, the Deputy Prime Minister and Minister of Finance of Kuwait. Thank you, Anas. And I'd like to invite His Excellency Senator Ishaq Dar, the Minister of Finance for Pakistan. And finally, I'd like to invite also His Excellency Dr. Erdem Basci, the Governor of the Central Bank of Turkey. Excellent. So with that, let's begin our conversation. So we're going to try and make this as much of a conversation as we can, and not so much a series of speeches. And really, I thought the best way to start us off, if I may, is to ask Dr. Ahmed Mohamed Ali, who has really been overseeing the development of this industry for nearly 4 decades, to give us a little bit your perspective. You've seen it in many countries that are members of the IDB. Give us a bit your perspective on how far do you think we have come in realizing the potential? Do you see any good examples where there have been successes in improving financial inclusion? And from where you sit, what would be the key challenges that you think the rest of us can talk about in the next hour? So let me ask you, please, to start off.
Bismillah ar-Rahman ar-Rahim. First of all, on behalf of everybody here, I want to express our sincere thanks to our speakers in the preliminary session, because really they covered everything. I told you they can see the governor, so there's nothing we can add. So we just apologize and to go away. So we are very thankful for both of them for very elegant beginning, and we are very happy. We learned a lot really from their statements. To answer your question, of course, from my experience more than 40 years ago, I think really, as has been mentioned by, as you can see, the governor, there's a great potentialities really for Islamic banking in their way to include almost all segments of the societies. This has been proved in many countries, and I am confident that if you overcome some of the obstacles now facing the industry, I am sure they have very great potentialities. Of course, among the difficulties is the size of the Islamic institution. Most of them, they are small size. There are many attempts really to establish mega banks, but until now, the efforts has not succeeded. IDB is trying. We are doing our very best. Inshallah, we will succeed in establishing mega banks, so they will have more potentialities to serve the industry. One of the major really services which the industry needs is where potential and also to have professional way of managing their liquidity. This is the second problem for the industry. There is no enough tools to manage their liquidity professionally. Of course, another problem we have is the lack of sufficient number of qualified professionals. Although we have IRTI, this is Islamic Research and Training Institute, as a member of the IDB group, and also there are many efforts in Malaysia. We thank, of course, the efforts of Dr. Zetti here, but still we are in need of more qualified people to serve the industry. Also the area of research and innovation, because we need to innovate more tools for the industry. And I am confident that with this momentum now, we see also the importance the industry getting all over the world, as have been explained this morning from the governor. So I am very confident that, inshallah, the industry will be able to overcome these some difficulties in order to have more and more role in including, inshallah, all segments of the societies. Thank you.
Thank you very much. So you've identified also 2 or 3 areas where you see as impediments, and we'll come back to those in the conversation. And maybe, if I might, I'd like to turn to Governor Al-Mubarak, because in Saudi Arabia, of course, this is quite a developed industry. And from an inclusion point of view, in terms of providing finance to SMEs, in terms of reaching parts of the population that have not otherwise been served by the banking system. From where you sit in SAMA, looking at the system in Saudi Arabia, how far do you see that the Islamic finance segment of the financial sector has helped to promote inclusion in both of these areas? And what Dr. Ahmed Muhammad Ali said, how far does that resonate with your own experience?
Thank you very much. Indeed, in Saudi Arabia, our experience in Islamic finance has been very long, and we pride ourselves that we host some of the largest financial institutions in Saudi Arabia, and Islamic or Sharia compliant products are offered by all banks, and there are over a dozen of different products that SAMA reviews and approves in terms of their compliance with the banking standards, and the respective Sharia committees at the financial institutions would approve their compliance to the Sharia principles. I can report to you that over 90% of consumer loans are Sharia compliant in Saudi Arabia. There are many other products in Tawarruq, Murabaha, Ijara, Istisna' that are being offered by all our financial institutions. I think our two main speakers, His Excellency the Governor and Her Excellency the Madame Lagarde, have covered the topics extremely well, and its suitability to the society, being asset-based, shared risk, and this type of structure lends itself for both individuals as well as SMEs. Financial inclusion is extremely important, and it relates to individuals as well as small to medium-sized enterprises. And in the G20 in Seoul 2010, it was declared that the three major principles need to be applied to achieve financial stability, and that is consumer protection, financial awareness, and financial inclusion. These three principles they go together, and it's extremely important to include the different segments of the society that has not been banked, including the low-income farmers, young women, retired, and in our region, expatriates. And in Saudi Arabia, we have done many initiatives to include all those segments. And we find that offering Sharia-compliant products for those individuals will further attract them to be included in the financial systems. I would also emphasize that we always focus on banks, but when we say financial institutions, we should always think of all the four subsectors of finance, which is banking, insurance, finance, as well as investment, because all of those areas, Sharia-compliant products have been developed and is being implemented in most of our institutions. In Saudi Arabia, there are many initiatives for financial inclusion, where we have done first a survey with the OECD, and we found that, for example, the number of or percentage of adults increased from 50% some 4 years ago to over 70% now. And we expect it to be even more as we are including lower income in our banking system through different programs, and especially electronic programs such as prepaid cards and mobile banking that has been extremely helpful to reach out. Also, we are encouraging our banks and monitoring their performance in spreading branches and ATMs all around the country and to the rural areas in order to be available for the unbanked societies. SMEs is equally important because they are also important, as has been said earlier in the speeches, that create jobs, promote growth, and develops entrepreneurs for them to grow their corporates to further contribute. There are countries where this was benefited, and it represents 40%, for example, of GDP in Korea. So this is very important. In Saudi Arabia, we define small businesses as businesses with less than $8 million of revenue, and medium to be from $8 to $26 million of revenue annually. In Saudi Arabia, there is about 360,000. About 10% of them are medium, and 90% are small. They have over $33 billion of deposits in banks. So they are important segments to serve and benefit from in our system. Lending to SMEs has been modest at 2% of total credit, comparing that to close to 14% in more developed countries. And therefore, we have developed several initiatives, and we are monitoring that with the banks in order to further develop it. But there are other requirements for us as regulators to develop for SMEs to succeed and for banks to be encouraged to include them in their credit lines, such as creating the regulatory environment, for enforcement. We are saying that Islamic products are asset-based, and unless banks can enforce and can take the assets back in case of defaults, then the system would not work. So that is extremely important. Awareness is very important, and education, developing human capital is also another complementary. Saudi Arabia, we have several programs such as Kafala, where the government will guarantee 80% of the losses of loans given to SMEs. And we have the credit bureau, SIMA, where they do an excellent record of credit for the SMEs and credit scoring that would be made available for any lenders with the permission of the SME. This is creating such environment will help promote. So indeed, financial inclusion has been increasing for individuals as well as small businesses and medium businesses, and Islamic products have definitely attracted those segments to the financial system.
Thank you very much, Governor. And, you mentioned the G20 in Seoul, and I know that now, under the Turkish presidency of the G20, also Islamic finance and financial inclusion is an item. So I'll come to Governor Bashir on that point in a couple of minutes, if I may, Governor. But before that, I wanted to ask Minister Al-Tarif whether you see from Kuwait's point of view, how is the issue of financial inclusion and the potential, it's also there to be realized. We heard of the 40-year history going back, and now where we are today. How do you see this challenge?
Well, thank you, Masood, and I have to concur with Dr. Ahmed. The governor and Madame Lagarde has left nothing for us to touch on. But as a politician, I will try to answer. And in a very short term, I would say it seems that now with the good relation that we share with our partners in Parliament, and we are in the process to we've passed and we are in the process of passing a number of legislations where we believe it would help, starting 40 years ago, going forward, and with the tremendous growth we see now, an appetite to to Islamic financial instruments such as Sukuk and some of the rest that my colleague Dr. Mubarak has touched upon. We believe that we are trying to create this infrastructure, create this environment to make sure that we match in Kuwait this growth, and we continue to be a host of large names that we've started like 40 years ago, and I see a number of them here, and be able to have more depth in those instruments. I think with prudent regulatory, we will be able to see a further growth in that part.
Thank you. So let me ask the other politician then on the panel. From Pakistan's point of view, where the industry has also been developing but doesn't have the same history as, for example, in Saudi Arabia, how do you see the challenges, and particularly are there any political impediments that you see to developing this industry?
Well, thank you. Let me first thank the Central Bank of Kuwait and IMF, putting up this beautiful show. And, it's a very thought-provoking subject, very close to, the international discussion as of now. The plenary session was beautiful. Both speeches of the Governor, Central Bank of Kuwait, as well as Madam Lagarde, were excellent. I think the way I saw Madam Lagarde being involved, it was seemed to be with passion in the Islamic finance. I was expecting she might announce to propose that the International Monetary Fund to be renamed Islamic Monetary Fund in due course. But having said that, Pakistan obviously, as a consequence of its own constitutional obligations, to move the banking system as close to as possible, as speedily as possible, closer to the Islamic finance. We had set up and taken a number of steps. There is a widespread interest. We have seen, the numbers in last 1 decade. It has grown 10 times. Those of you who actually first time the World Islamic Economic Forum, which was held first time outside any Islamic country a couple of years ago, and Malaysia was co-host in London. And I remember David Cameron proposing that UK will give any and all incentives which the Islamic finance would require. Obviously, the objective is to attract most of the business. So it is today 2.6 trillion approximately the size, but I think in the years to come, it is a great potential, growth potential. Now, the challenges, in our opinion, which the Muslim countries are obviously facing, is the lack of financial inclusion, which is the subject of this session. Significant population remain unbanked, underserved, or unserved, and the Islamic finance, in fact, supports financial inclusion in many ways. First of all, it ensures sustainable development as well as broad-based and inclusive growth. We have heard the two speakers. Maintains close linkages with the real economy, and it emphasizes the redistribution of income and wealth. I think these are the things which were highlighted this morning. And let me just share a little bit of statistics, since you have asked me to particularly share, vis-a-vis Pakistan. Today, the 16% of the Pakistani adults have an account with a formal financial institution. South Asian average is 33%. So we are still lagging behind. And average of all low middle income is around 41%. Number two is the 53% of adults use neither formal nor informal products. So this is, we are working on, while 72% of adults save, but only 12% save with a formal financial institution as of now. 24.5% adults borrow money, only 2.4% borrow from formal financial channels. Insurance coverage, our friend from Saudi Arabia has very rightly indicated the insurance should be part of this entire debate and discussion. In Pakistan is only estimated to be at 4.7% coverage as of now. 21% of men have a bank account, while bank account ownership among women has increased to 11% in last few years from 4% only about 7 years ago. So we have taken significant steps, regulatory, what Madam Lagarde and what Governor Central Bank of Kuwait said. So far, we have put a regulatory framework for microfinance banks. We have already put adoption of branchless banking regulations in Pakistan. We have established a specialized microfinance credit information bureau already. We have launched a nationwide financial literacy program, and we have taken a number of credit enhancement facilities aimed at encouraging financing to the unserved and underserved sectors. Now, having said that, all these limitations, but the Global Microscope publications in 2014 has ranked Pakistan one of the top 10 for its enabling environment for financial inclusion. So whereas there is a lot more need to be done, but we have already reached a space in the first 10 as a country, and there is a setup of a standard steering committee headed by Deputy Governor of Pakistan, who is regularly working on the financial inclusion as well as on the Islamic banking expansion. Now, as a government, it is our endeavor to move on as much as we can through the evolution process towards the Islamic products for the sovereign borrowing. We have last year issued a sovereign bond. We entered in the market after 7 years. But at the same time, I, as finance minister, made it sure that I do keep a space for sukuk. So a few months later in 2014, we went for a sukuk. It was very well received internationally. I think Madam Lagarde has very rightly pointed out that it is a risk sharing element in the Islamic products. I personally believe, my opinion may be wrong, I think the global crisis we saw in 2007 and 8 was basically the over-leveraged borrowing internationally, which led to the breakdown of the system. I think there's a great prudence in the Islamic financial system, which actually avoids, because of the underlying collateral, so you are automatically discouraged to be over-leveraging yourself. So I personally believe that there is a great scope of expansion. We are actually working on a number of new steps in Pakistan. We are working on foreclosure laws because obviously the housing industry cannot thrive, whether it is conventional basis or the Islamic basis of financing, unless you have a very strong foreclosure laws. We are already working and adopting pro-growth policies, which have been discussed by the earlier speakers, in order to, and encouraging the innovations. We are going into partnerships and alliances between Islamic financial and industry and microfinance institutions. We're trying to link between the two in order to promote these small and medium enterprises, as well as the microfinance and linking it to the Islamic finance. We are trying to integrate Islamic microfinance activity with social welfare tools such as Waqf in Pakistan. We have actually almost in a big way, we have a very huge social safety net expenditure. And we have shifted the disbursement of money, we are shifting gradually through the financial inclusion tools. It has dispersed the regular cash grant by e-payments now. The beneficiaries are almost 5.3 million families, which mean about 30 million people. It's 1/6 of Pakistan population. We have also dispersed in the last couple of years on e-payments almost $2 billion now through this new mechanism. So we are undertaking new pilot projects for financial literacy and inclusion. And BIS has this microfinance loan, 3,000 beneficiaries, 13,000 beneficiaries to begin with, who are provided 30,000 rupees. So we are moving gradually towards this. I think there's a great scope. Globally, there's a great scope, and as Governor Central Bank of Kuwait said this morning, it's not only Islamic reason to be moving towards this. Is a great base and great scope. And I think the best thing, in my opinion, that it does not allow you to over-leverage. because there are countries, without naming them, who have now gone beyond 100% of their GDP in borrowing. And when rating agencies try to move in, they are not able to. Whereas countries like, the middle income or the developing countries, they have obviously certain limitations. We have our own Debt Limitation Act in Pakistan. And, we are not supposed to borrow beyond 60% of the GDP. So I think this discussion of today is going to add value, is going to make a great contribution towards further, not only promotion of financial inclusion, but also promotion of Islamic finance.
Thank you, Minister, that's a very comprehensive overview of what's being done in Pakistan. So let me now come to Governor Bakshi, and perhaps you could start off with giving us a sense of, from the G20 presidency perspective in Turkey, you've put Islamic finance on the agenda, and you've also been focusing on financial inclusion and investment in infrastructure. All of these are different elements. How do you see these coming together? What's your aim and objective? How would you define success in terms of moving this agenda forward?
Thank you. Thank you very much, Mr. Ahmed. I would like to first thank and congratulate the organizers for this event and inviting me to speak in this panel. As you know, in Turkey, under the G20 hat, we have emphasized continuity and change. Continuity was related to two I's that we have emphasized. These were basically implementation of the agreed upon reforms and the structural reforms that will boost growth, and also investments. But investments will be discussed in the following panels. So I will not talk much about investments. But the new addition under the Turkish presidency, the change, was inclusiveness. So that's why we have emphasized inclusiveness on many areas, not only in finance, but many areas, like women's inclusion, young population's inclusion to growth, and financial inclusion, of course. So this has been received very well by all the G20 members and international institutions. There has been acceptance of this additional I. So now we have three I's of the G20 actually. And I think the Chinese presidency next year will be thinking about fourth I or fifth I to add to it. But inclusion is very important. And let me just briefly talk about the connection between our topic and short Turkish history. I heard that Kuwait Finance House was established in 1978. And in Turkey, we had special finance houses which were established in early 1980s. When Turgut Özal was the deputy prime minister at that time, so he said that for inclusion reasons, we have to have these special finance houses which are based on participation banking, which are based on profit and loss sharing deposit accounts. Why? Because there were many people who were pious and who were quite sensitive for religious reasons, and they would not really go to any bank. Even they would not sit on a bank, actually, because there would be some advertisements of the banks on the bank. They wouldn't even sit on these banks. So to include those people to the deposit base, he said, let's license these special finance houses. And over time, these were actually evolved to participation banks. Under the new banking law in 2005, they were recognized by the banking law, and we have all the infrastructure ready to support these participation banks. Maybe later, if I have other rounds to talk about it, I may also talk about what's missing regarding the inclusion. Right now, not only in Turkey, but also globally, it has been good to have inclusion of deposits. Now, right now, if you go to Turkey, for instance, almost 100% has an ATM card, has a bank account. So this has been fulfilled. This objective has been fulfilled. The participation banks has roughly 5% share. So that completes the picture on the deposit side. That's the liability side of the participation banks. But what's missing is on the asset side, we don't have enough risk sharing, enough profit loss sharing contracts. I think they are called mudaraba or musharaka. That kind of profit loss sharing is really very small. So what we need to include is inclusion of innovators. I will perhaps talk